Let's find out. We've got Rajiv Agarwal of Doordashi India Fund now joining in. Thanks so much for taking time out. And I just wanted to get in a sense from you as to what exactly, you're expecting in terms of the market dynamics, just globally as well as back home. Do you think that after we've, at least when it comes to the global markets, after they've been navigating through this election cycle, lots of unusual market dynamics as well, what's in store for the next year?
Yeah, and good morning, and thanks for having me on your show. I think for 2025, clearly the one big event is Trump taking over the reins as the president of the US. And I think there is expected to be a lot of policy measures that he will introduce very, very quickly. Clearly, he has the picks that he wanted, and I think many of those will get confirmed. So I think that is going to be the one big event that will drive a lot of the markets. Beyond that, I do think as we get some sort of a visibility on both the Mideast crisis as well as the Ukraine-Russia crisis, that will drive. And then coming back to India, I believe that in India, some of the current pushback or pullback that has happened on the financial side, we have to see if that persists. And the problems that we are seeing on the MFI and the banking side, how long they persist, because that will be a critical driver in terms of how the growth opportunity in India will look like.
Okay, point taken. That is something that one needs to really watch out for. But Rajiv, given the way how this year has panned out, and we haven't seen double-digit gains as far as India is concerned this year, and the expectations are moderate for next year, given the earnings momentum you talked about. What's a realistic estimate, let's say, of returns when it comes to 2025? Are we likely to see those average 12 to 13% gains? Can it be less? Can it be more?
Yeah, I mean, I would think that for an economy like India and for the shareholders, one should expect around that 13%, which has been the long-term average for Indian equities, to be sort of the base case. And then I think like very recently, we started hearing chatter about whether the income tax rate will be cut and so on. So the policy measures will drive to a very large extent what happens either on the upside or the downside. I think the one other thing that I feel is that markets may not tell the full story, because there is a story about some stocks that have really risen a lot in 2024, and maybe they will take a little bit of a backseat, while some others that have been punished in 2024 may have a better opportunity as we go into 2025. So it may be a lot more stock specific rather than market specific. But I think from an Indian stock perspective, I would assume that the base case is around 13% sort of an annual return is quite reasonable, I would say.
Okay, point taken. But Rajiv, like you mentioned, the big event heading into January is going to be Trump taking over the US administration. Tell us on the back of that, how do you expect that to pan out for our Indian markets? IT could be a sector that could be in focus. Where are you penciling in to see some kind of growth? Which sectors do you think will do well, and which sectors do you think could take a little bit of a back foot in 2025?
Yeah, so actually, I believe, and our fund believes, that really it is the domestic sectors which will be driving the growth of India. And when we look at domestic, I think capex will continue. The government has been very focused on ensuring that the capital expenditure continues. Infrastructure should continue to do well. Defense should continue to do well. I believe that because of all of these big ticket items, we will see decent momentum in the banking and finance space. So those are some of the sectors that I believe should do reasonably well. Now, whether they're already priced in terms of the stock performance is a question that we have to address one by one. In terms of the export sector, I do think the markets and some of the stocks are not necessarily penciling in the fact that there's enough volatility that one should expect as Trump takes over, right? Because Trump is much more focused on ensuring that there are enough tariffs and the US jobs are protected and stuff like that, which may create headwinds for some of the export-oriented sectors, especially if his policy measures impact Indian companies, which very well might happen, or that may be a bargaining chip that he might use to ensure that US goods get a much more freer hand as they come into India.
All right, going to let you go. Thank you so much, Rajiv, for throwing light on what the expectations are for the year ahead and the macros as well that we'll be tracking.
If you like this video, then like, share and subscribe to ET Now.